Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo, Modiba, and thanks for joining me. Tonight, I'm joined by Lanre Buluro, Head of Investment Research at Primera Africa, joining us in our Lagos studios. Lanre, the breweries industry, specifically in Nigeria, we know it's been a big week or couple weeks in terms of the global picture, but delving down specifically into Nigeria, what's the current dynamic looking like for the industry?
All right, thanks for having us. As you mentioned earlier, the acquisition and transaction going on in the brewery sector, it's quite interesting and definitely has impact on Nigeria. I mean, as you know, Nigeria is a big market, and SABMiller has some exposure to Nigeria, so it's definitely implications for our markets. It's been a very competitive market over the last few years, especially this year in particular, with the economy slowing down. Consumption has come down. We've seen a lot of consumers actually trade down, focusing much more on the value segment of the market. And SABMiller actually has a strong product offering in that line. So we think the deal between InBev and SABMiller definitely has direct impact on our markets.
So I guess that would implicitly mean a little bit more competition for SABMiller's peers in the market.
Well, I mean, as I mentioned earlier, SABMiller has about 2 to 3 breweries in Nigeria. One is publicly traded, while the other 2 are privately held. We've seen volumes grow across the operations in Nigeria, particularly in the value segment. That's been the main focus for SABMiller in Nigeria. I mean, the market share growth they've seen actually spur the other 2 players, Nigerian breweries and Guinness, to revalue their business plan and also provide offerings in their market. Earlier this year, we saw Nigerian breweries merge with one of its sister companies. It's also owned by Heineken, which is actually the #1 value segment player in the market, to gain market share in Nigeria. Also, Guinness, which is a subsidiary of Diageo, launched a very unique product into the market, catering to the, I won't call it a value segment, but catering to the local pride of the citizens of Nigeria, called Origin. And that's shown, it's an alcohol pop actually, which has shown strong volume growth over the last few quarters. Actually has driven the sales and volume numbers for Guinness in Nigeria over the last 3 quarters.
Let's start with Nigerian breweries. Certainly, when you look at the operations, it looks like cost of sales has been increasing quite rapidly, which overall has affected profitability. Your sense of the business and where it stands right now?
I mean, the cost of sales, it's across the sector in general, and it's a factor of the devaluation that happened earlier this year. We should probably see softening of that impact in the 3rd and 4th quarter numbers. If you remember, the devaluation happened sometime in February, and the flow through was reflected in the cost of goods. I mean, globally, commodity prices have been coming down. Yep. That should have been, we should have seen that impact, but due to the devaluation that happened early in the year, we saw cost of sales go up. For Nigerian breweries, I mean, listen, it's the largest brewery in Nigeria, still has the #1 market share. I think it's about maybe between 69 and 70%. They have a strong route to market platform, which has helped them push products into the deeper regions of the country. It's struggling, particularly on the mainstream front. Because as I mentioned earlier, the economy has been slow, and we've seen a lot of consumers either trade down or actually do without some of the products. But I think based on its size alone, and I think in the long term, once demand picks up, we see Nigerian breweries also picking up.
Right. And what does the outlook look like for overall volume growth, not in the short term, but going out a couple of years?
I think volume growth right now is going to be tapered, just because disposable income is under pressure in Nigeria right now, and that's been why you've seen this big push into the value segment of the market. So what you're going to see is the mainstream brands take a back seat while the volume for the mainstream and cheaper brews go up. And you're going to see a negative price mix effect on the results. As I mentioned earlier, overall beer market is probably doing about maybe literally flat, or say 2%, while the value segment of the market is about 30% growth we've seen year to date in the market. So long term, we probably might see a return. I think once the economy picks up, and consumer confidence also picks up, we might see volume growth increase. But between short to medium term right now, we see it struggling.
And with the move into the value segment, as you put it, is that likely to mean compression of margins?
Yes, of course. You definitely see margin, because it's a cheaper products, right? So while volumes are strong, the price points at which these things are offered in the market are much more lower than your mainstream brand. So margins are going to be compressed. We've seen a big push across the sector, actually, for companies to manage its expenses and try to see how they can maintain margins. But I think there's definitely going to be some margin impacts due to the strong growth and also the price mix effect of the value segment of the market.
And does this big merger potentially happening impact that picture anyway? The margin picture in particular?
SABMiller, they probably still number 3 player. I don't see that. I mean, at least not in the short term. I mean, the merger is going to take a while for it to really conclude. We think, it's a possibly also maybe shine some more light on the international brewery subsidiary of SABMiller. There are SABMiller's subsidiaries in Nigeria are regional players. There are plans to roll out a national plan. And do we see any immediate impact on margins with other players in the market? Not immediately. Like I said, once the merger is completed, we'll get a clear sense of what their plan is in Nigeria. I mean, just to mention, we think the deal actually is a deal for Africa due to the lack of exposure of InBev in Africa.
Sure.
I think the markets where SABMiller has strong market share, you might see maybe strong competition, strong impact in those markets, but not in Nigeria right now in the near term.
Okay. So overall, the picture for Nigerian breweries, are you fairly bullish in terms of the company?
Right now, we have a hold on Nigeria as a current valuation, just because we see current valuations are quite rich. I mean, companies are trading above 20 PE, if I remember correctly. Long term, we like them. But right now, at current levels, we have a hold on them. That's our rating on them. I think it's fairly valued. Okay. Considering the economy where it is, considering consumer spend, and the overall dynamics in the market, I think if we should probably make a recommendation right now where we see value, probably be international breweries. Just because of it's trading quite cheap right now, I think the long-term prospect for the company is quite attractive.
And if we shift focus to Guinness in particular, you touched on the Lanre brand Origins doing quite well. Your take on the business right now?
I think we're quite impressed what they've done in the last 3-4 quarters. I think the Origin brand has been a very positive move in their direction. I mean, we've been waiting for a while for Guinness to come out with something innovative. They've been expanding capacity for the last few years, and innovation in this particular product is quite impressive. I think they've also launched Satin Brow. That's another brand that's been catered to the value segment of the market. There's a national rollout pending for that right now. In regards to valuation, it's quite rich. A few weeks ago, the parent company, Diageo, announced a tender offer to increase ownership stake in the company to as high as 70%, sure, and actually give a guidance, or should I say ceiling, in regards to price. So what happened when the announcement was made, we saw a rally in the share price to where it is right now. We think it's fairly valued. We have a hold on it right now, just on valuation basis. But I think long term, we're quite positive about the company and what they're doing. Mind you, we've seen Nigerian breweries come out with a similar product to Origin that has quickly ramped up and gained number 2 market share in that particular segment. So only time will tell and see what's going to happen. And we don't expect a price war, but we're definitely been seeing a marketing campaign from both companies trying to get the consumer to remain loyal to the particular product lines.
And is there scope for broad, or I guess further volume growth for the Origin brand in light of that further competition?
I mean, volume has been steady. It's been strong. We haven't seen any tapering in the volume for Origin itself. What Guinness needs to do, and this is where Nigerian breweries has a little advantage, is the route to market strategy and the platform itself. Guinness has talked about rolling out into the rural areas. They've really much touched the major cities. Now they've ramped up capacity and trying to grow its platform to touch deep into the market, into rural areas, and not just in major cities. So we'll see how that will pan out.
Okay. And in terms of margins, what's the outlook for margins for Guinness in particular?
Margins are thin. It's been tough. I mean, as I mentioned, there's been a push for this value segment product lines. Also, as I mentioned earlier, too, they've also been impacted by the FX devaluation that occurred during the year. So, and also the fact that they still import a good 40 to 50% of its inputs, that is also weighing down on margins. But I think what they're doing right now internally is now to ramp up local sourcing, also trying to optimize the procurement system, working with Diageo, its parent company, to how to get things cheaper, to also create storage facilities where they can actually store, 3-4 months supply of raw materials. So I think in the long term, we'll probably see margins expand. But the key driver for this is also to be the return of demand for the mainstream brands. Right. I think once volume pick up in those names, we'll probably see margins expand a little bit more better.
Right, but a lot of that good news in terms of potential margin expansion is pretty much priced in.
Yes, I think. I won't say as much as of now. I think the story, particularly for investors, is about right now. Those that understand the story, understand the company very well, have probably done evaluations and say, hey, listen, I think once demand picks up in Nigeria, probably see margin expansion. So it's kind of a mix in regards to if it's really priced in right now. There's a lot of volatility going on. As you know, the Nigerian market right now has been in a kind of a short, should I say, sell-off stage right now, just due to mostly the macro situation.
All right, perfect. Let's leave it there. Thank you. Thanks to my guest, Lanre Buluro, Head of Investment Research at Primera Africa from our Lagos studios. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.